Good time to bring in Krishna Sanghavi, who's the CIO Equities at Mahindra Manulife Investment Management. Thanks a lot for joining in. The market looks good. Last week has been good. The global, picture seems to be a little more clearer than what it was, say, about 10 days ago, Krishna. But the big news that came this morning was on the paint sector. So let's start with asking you your views on consumption and the paint sector in particular. It's been a long summer for all these paint companies ever since Birla's announced their foray. There has been a multiple de-rating for a lot of the incumbents as well. And now this morning, there is another deal that has come in. JSW has gone ahead and bought AkzoNobel. In light of this disruption, what are your views on consumption and paint stocks in particular?
Yeah, no, actually, maybe this disruption, as you mentioned, is perhaps, one good indicator that, Indian consumption story is pretty much intact. Yes, there are new players entering, and, for any segment, when there are new players entering, there can be some sort of market share, grab kind of competitive activities which plays out and which is pretty normal. But the big picture is, yes, there are quite a few sectors or subsectors of consumption where new players are looking to enter. And so look at consumption in slightly bigger details. Yeah, what all we need perhaps for consumption is, let's say, more money with consumers. That's partly played out through tax reliefs in the budget. People are going to have more money as the year progresses. The amount actually goes up. On the other side, we also have a situation where in next 6 months or so, the pay commission announcement is likely. Consumption had a slightly weaker patch, even from a numbers perspective. YOY, the base has been weak. So I think broad picture on consumption, core India, demography, India earning, stroke, tax relief, more money with consumers. I think that's going to play out. So consumption as a broad space, we expect things to improve from now on.
The stock of the morning definitely is AkzoNobel. What a big recovery that we've seen from the lows, despite the offer being a lot lower than the current market price. Maybe the street believes that the new ownership.
That's the only logic that I can find, Mangalam.
That exactly is the only ownership.
It's a deep-pocketed, serious player that means business, that can put more money to work, that can perhaps withstand even a pricing war if one were to come through. And I mean, from AkzoNobel, who wanted to sell an MNC company, not looking at too much of interest maybe in India, at least in this part of the business. Now you have a serious corporate entity backing it.
I'm not too sure whether it is about the deep pockets of the conglomerate that is backing it, etc. It's more of a relief that the deal is done now, because up until the deal would happen, people would be skeptical of bidding into AkzoNobel, knowing that at some point someone will go ahead and buy it. So irrespective of who's bought it, and I'm sure there's strong people, whoever buys it is a 9,000, 10,000 crore asset, will not be shallow pocketed, but the ones who buy it, the fact that the deal is over makes people now a little more, relieved that, this is what the future of AkzoNobel looks like. The stock has been under pressure. Maybe there is a bet that needs to be taken.
Let's ask Krishna. Krishna, we're not asking you to, comment on any individual stock, but we're just trying to find rationale. Typically, when deals are announced in the market pays a lot of attention to the price at which the deal has been done. Here, that price is 16% lower than where the market was after a big correction in paint stocks. And now the market's taking a very favorable view. How would you read into this? What are your thoughts on the paint space?
So I think let's not read too much into the immediate price reaction, just on the deal being announced, because this doesn't really add value, because even the buyer perspective, obviously they've not bought for a single day kind of thing. It's basically a new business opportunity for them. Paint as a sector, as you mentioned earlier, I think consumption play is pretty much, the core story. We have a nice combination of, whatever I say, house durable, the house paints going on, maybe infrastructure is improving. So paint is structurally a good story. Competitive intensity can, decide a little bit shift of market shares or, margins, profitability, etc. But that does get, captured in market valuations.
Hi, Krishna. Good morning and good to see you. One problem has been the kind of supply of paper. Day-to-day basis, $500 million, $1 billion worth of sale that's coming in. Actually, for one, I'm happy that we're going to be seeing, the earnings season that will take shape in the next week or so, because a lot of these companies will go into silent period. If that's the case, and if liquidity continues the way it is, do you think there's a chance that you'll have the broader markets actually that will outperform?
Yeah, fair thing, in the sense that let's look at the supply of papers is continuously on the rise. If the numbers are broadly right, I think in last 6 weeks or so we would have got roughly 1 lakh crore worth of supply, either primary or promoter sale combination. It is a large supply. Luckily, markets are able to absorb, and despite that supply, markets are again making newer highs. So that's possibly telling us the markets are clearly in a bull trend. Maybe global markets are equally supportive. It's not only India. Let's not forget, it's not only India. Almost all major global markets are making newer highs for current calendar year, and India is no exception. So to that extent, yeah, markets are in bull phase. Some of the supply is being absorbed. Two combination, you have a nice free float increase in the market, which somewhere will help rationalize valuation. So in a way, yeah, supply one needs to be slightly worried, because at some stage this supply takes money away from existing stocks. So demand supply dynamics will matter. But yeah, for now the broad bull market phase is on. Yes.
Okay, got that. So, Krishna, then tell us about your preferred sectors, and definitely mention in a word on defense, because of the last, I think, 6-7 months, this is the one pocket we spend so much time talking about. Stocks have done well. For now, at least, the war issue seems to have receded in the background. What are your thoughts?
Yeah. So I think from a sectoral choice, BFSI, comes in as one of the name. We got a nice combination of, regulatory support. Uh, Reasonable rate cuts have happened. Money supply is increasing, so liquidity is back in system. So if we add those two, which is the core requirement for a BFSI, is a space to do well. So that's one particular space. I think consumption, I did mention earlier, is equally a sweet spot going ahead, because of multiple factors which I mentioned. Defense, yeah, it's actually India's core story, which has emerged post COVID, when government decided to go for some sort of that self dependency, Atmanirbhar, for India's defense needs. And quite a few Indian companies, have shown their ability, or on the way to show their ability to get into export market for defense. So structurally, yes, defense also can be good. Valuations, one can always, wait on some stocks for a better opportunity.
Right. And what about, the banks? A lot of people are finding value in financials right now, because every other pocket seems to have run its course or fraught with uncertainty, where valuations are compelling. They believe that if there is any growth that is likely from here on, banks stand to benefit the most. What are your thoughts there? Do you prefer private banks, public banks, or you look at NBFCs as an option?
Yeah, so the bigger piece is, let's say, lending. So if credit growth is back in system, I'm sure banks and NBFCs both have a participation in growth. From a cost of fund angle, maybe benefits to NBFC may be slightly ahead of benefits to banks, because the way the liability side is structured. But from a very good angle we got is when this rates hike cycle happened in 22-23, we got a nice roadmap of how assets gets repriced for a bank, and how liability repricing follows with some lag on of 3-6-9 months based on the liability profile of the bank. So my guess is NBFCs can be a near-term beneficiary of a lower rates on their borrowing side, while banks should follow with a 6 to 9 month lag at max. So if I look at FY27, maybe which is possibly a full relevant year for this purpose, I think both banks and NBFCs as a lending combination will have a nice sweet spot of liabilities repricing already having happened, and the credit growth being back in system. So good earning growth for FY27.
All right, Krishna, final question before we let you go. The fear is, towards the end of this year, again, we get into election mode. Bihar will kick it off with, I think, the state elections. How are you positioning with regard to, what are your expectations, both on the fiscal and the monetary front? RBI has given a good booster shot for growth, and they've shown that they are pro-growth. On the fiscal, it seems that, maybe there's limited headroom now, and particularly with these state elections coming about, again, it, keeps sentiment subdued. Your expectations on both these two fronts?
Yeah, so at macro level, from a fiscal policy perspective, the central government has reached a stage where we actually on a fiscal consolidation, nice way to reduce fiscal deficit by, 20, 30, 40 bips based on the yearly, situation. So that roadmap is intact, which is healthy fiscal consolidation, and that should support the broad macro for the country. So that's a good part. I think clearly RBI policy on monetary, accommodative stance which they took, and very nicely, the quick quantum of rate cuts in terms of 100 bips in just 4 months, as well as nice liquidity expansion. It should play out for economy going ahead. Elections, do have uh, on the card in India, but we've seen in elections almost every 6-9 months happening in India, because 29 states, almost everybody goes through a 5-year cycle. So election part, honestly, markets, have taken into their stride over time.
Okay. All right, Krishna, we'll leave it on that note for this morning. Thank you very much for joining in with your perspective on the market and the